Okay, today we do the paper 1, which is for the year February-March 2021, paper 12, which is paper 1. Okay, now first A, question 1. A business employed a bookkeeper and accountant. Which task would the accountant perform? So for the bookkeeper, basically the key thing is the recording. This is for the bookkeeper. Whereas accounting basically use the recording, the detailed recording from the bookkeeper, prepare the financial statement to do the analysis so that provide to the management for the result. So here, what is the job that need to be performed by the accountant? Extract balance from the ledger to produce the trial balance. Bookkeeper job is do up to the trial balance. So this is a bookkeeper job. Okay. Making entry in the general journal, part of the bookkeeper job in terms of the accounting flow. Okay. General journal fall under book of prime entry. Okay, this book of prime entry is done by the bookkeeper. Preparing a monthly report that analyzes the profitability, analyzing. This is a accountant job. Recording sales, and this is the detailed recording in the book of prime entry. So basically, this is also bookkeeper job. So the answer should be C. Now let's move on to the second question. What are the assets? Asset is belong to the business or something owed to the business. So here amount owed to the business, yes, yes. Amount owed by a business. This one is a liability. This one is an asset. Item owned by a business. This is like a non-current asset. This is owned by the business. So yes, no. Okay, so they want asset. So the answer should be C. Next, let's move on. Number 3. On 15 February, Carlo made the following entry in his account. Debit bank, discount allowed, draw. This one is showing that discount allowed is expenses. Okay. Next, which transaction was being recorded? Dokla paid Carlo by check after taking a cash discount. Who received money? Stand from the Carlo point of view. Carlo received money. Received money is in the debit side. So who paid the money? Droba paid the money. Pay to the Carlo. Bank means by check. Carlo give the discount. Stand from Carlo point of view is a discount allowed, expenses to the Carlo. So here, cash discount. So the answer should be A. And what is the difference between cash discount, trade discount? Trade discount is when you purchase bulk purchase, you will get discount. This one is to encourage bulk purchases. Whereas cash discount to encourage the fast payment or the prompt payment or pay earlier. This cash discount got two types. One is a cash allowed, a discount allowed. Another one is a discount received. From the seller point of view, discount allowed. From the buyer point of view, discount received. Okay. Number 4, J is a manufacturer. On 1st February, he purchased a machine costing 15,000 from Benita. He paid 10,000 immediately by check. So the double entry will be debit, machine, nary account, credit, bank, because by check. But now the question saying that from his personal bank account. So this one cannot be used. We have to change to capital. Okay, the balance was to be paid in June. Balance going to pay in June, that means it's a risk. You owing the Vinita. So another entry, machinery and credit Vinita. If the question gives the name, you have to put the name. So the answer will be the debit bank, credit bank, credit Vinita, and debit the machinery. So the answer should be machinery 10,000. This is a bank. So we should take the donkey. So the answer should be donkey because here is a capital. Okay, so these two amounts are the same, but this is a bank, this is capital. Answer should be donkey. Now let's move on. Okay, question 5. Jamil financial year ended on 31st December. On 1st January 2021, he brought down a debit balance on his stationery account. Stationery account, there is a balance, debit balance sitting in here. What does the balance represent? Amount owing for the stationery. When debit side is a asset. So asset is owned. Okay, owned by the business or owed to the business. So that amount owing for, this one is wrong. Okay, this is a liability. Amount paid for the stationery during 2020. So this one paid last year, but they are talking about this one. So this is no. Cost stationery used during 2020. This is also no. This is not used. It's not used. Not used. Okay. Inventory of stationery on first. Yes. Inventory is a asset, current asset. So the answer should be donkey. Next. Question 6. Dasha returned goods to Amina. Which entry did Dasha make in her book? Dasha returned. That means to Amina. This is the buyer. This is a seller. Okay. From the buyer point of view, buyer record purchases. Purchases return. Okay. Now return goods mean purchases return. Dasha record, that means buyer record. So purchases return. Double entry will be who received the goods? Amina received. So debit Amina, debit Amina. Credit purchases return, purchases return. Okay, now how we differentiate the book? Amina is a person name. From buyer point of view, this purchases Amina is a seller. Seller, supplier, we record under purchases ledger. From the buyer point of view, purchases ledger. Purchases return is under the general ledger. So the answer should be B. Okay, know how to differentiate? Purchases ledger only record supplier name. Must have the name. Okay, now next move on. Question 7. Which book of prime entry is written from the copy of credit notes? Credit notes issued by a trader. Issued by a trader, that means this is a seller. Seller will record sales, sales return. So where the book will be recorded? Sales return journal. Question 8. Which transaction is recorded in the general journal? Correcting of an error in the general journal. There are few functions of it. Correction of this one in recording sales. Correction of an error. This is one of the function. Drawing in cash. The cash word is a cash book. Okay. Purchase of a motor vehicle by check. The moment you saw the check, this is a cash book. Next, purchase of goods on credit. Purchase goods on credit, it is under the purchases journal. So this one, general journal. So correction of the error. One of the function is correction of error. Other than that, opening balance also can use the general journal. If you have purchases of non-current asset, also on credit, this one is on credit, that means didn't pay immediately. This one can use the general journal. If you have any year-end adjustment, also using general journal. Okay, next. So this is the answer for it. Question 9. Raminder maintained a petty cash book using the Impress system. The monthly interest of 250 is restored on the first day of each month. In January, the petty cashier spent 105 and received a refund of 15 from the stationery supplier. How much was given to the petty cashier on 1st February? Restore the Impress amount. He get a refund. Okay. He spent this amount. Assuming there is no opening, balance brought down in here is 0 because they didn't mention this is a receipt. Amount is 0. He spent 1 because assuming no opening, but the Impress amount is restored. I mean, in the beginning of the month, he will get a bank amount. Okay, bank amount 250. This is a debit side for the petty cash book. And then he spend the item total here is 105. This is a credit side. And then he received the refund from the stationery supplier, which is 15. So basically, you want to find the amount. You take these two minus this one. You get a balance carry down. Okay. Now let me calculate first how much of it. 250 plus 15 minus 105. So the balance carry down is 160. So balance brought down next month is in here 160. How much to be top up? We have to take this 250 minus 160, which is the 90. So 90 we have to reimburse. So another way is the quick way to do it. Don't need to go through this amount. Is that we take this amount minus this amount, which is also get $90. So this is a two-way to do the reimbursement calculation. Okay, now let's move on to the next question. Question 10. The total of the trial balance failed to agree. The total of the credit column was 10,000. 2 errors were found. So the total credit column, total credit is 10,000. Okay. The sales journal has been overcast by 10, by 100. Sales account is in the credit side. Overcast by 100. So means that in here, basically is less 100. So let's see what 10,000 minus 100. So in here, if talking about the first error, this is a situation we have. Goods sold to Sarah on credit for 200 has been incorrectly debited to Zara. Sold to Sarah, okay, on credit has been incorrectly. This is a error of commission. Error of commission, there is no adjustment. Don't is that no should be saying that no, it will not affect the trial balance, but there's an adjustment for the Sarah and Zara. There's an adjustment needed. So next, what was the total of the debit column of the trial balance? So the answer should be B, which is this amount. Okay, now let's continue. Question 11. On 31st December, the bank column in Farah cash book showed an overdrawn balance of 2,000. Overdrawn cash book, that means your cash book balance brought down. Okay, so no, this one is 31st. So I put into here first. Balance carried down, overdrawn 2,000. Balance brought down 2,000. This is a situation. So now here they say that the following item has been entered in the cash book, standing order for the rent. So we have to minus the rent, 200. And then interest on the overdraft, interest 50, which is had to pay. Credit transfer from X Limited, which is the amount in here, 2009. So we calculate again. Now here is 2250. Here is 2900. So the differences, 2900 minus 2250. So we get differences 650. Now we have a balance carried down. The new amount will be sitting in here, 6500. So they're talking about the 1st January. 1st January talking about this one. Okay, so debit side. Now is go to the debit side already. So debit 650. Okay, move on. Rush is both a customer and a supplier to Barbie. Rush account in Barbie's sales ledger account show a debit. Okay. Rush account in Barbie sales ledger. Sales ledger, Rush account. Okay. Sales ledger means that debit balance here, 300. There was a credit balance of in the purchases ledger. Purchases ledger, Rush balance brought down 100. A contra entry between the two accounts was agreed. How we do the contra entry? Contra entry taking the smaller amount. So we will take this amount, transfer into here. Okay, so put this double entry. So now, which entry will Barbie make in his purchases ledger control account? Purchases ledger control account refer to purchases ledger here, this one. So here it will be sitting in the debit side. So here debit, how much? Debit 100. So the answer should be C. Okay, now let's continue. Motor vehicle repair 200 were debited. This is a principal error, which is that motor vehicle overstayed by 2,000, whereas motor vehicle repair account understayed by 2,000. Motor vehicle are depreciated at 20% per annum on the balance of the end of the account. This 20% times 2,000, which is 400. This 400 depreciation will charge to the expenses. So here, when you charge to expenses, expenses overstayed. But this repair 2,000 understayed, expenses understayed 2,000. So here, effect on the profit for the year. Understayed 2,000, overstayed 400. So net effect for these two will be the understayed 1,006. So understayed 1,006. So this one should be the expenses. This one talking about the profit. Okay, then in this case cannot be understated. Because these expenses understate, this is referred to the expenses, and then profit should be overstate. Okay, profit should be overstate. The answer should be E. And take note that profit and the asset normally have the same effect, which is when one overstate, another one also overstate. Most of the time, asset and the profit. Okay, now let's move on. Question 14. Mandit depreciate his motor vehicle at the rate of 20% using straight line method. A full year depreciation is provided in the year of purchases. Mandit bought a motor vehicle on 1st Jan for 20,000. On 1st June, he bought second motor vehicle. What was the depreciation charge in the year? Okay, here they say that a full year depreciation provide for the year. So that means regardless when you buy, you also will calculate the full amount. And this one, 1st January. So the motor vehicle one, number A, okay? 20,000 times 20%. So which is the 4,000. Okay. 4,000 each year. 2017, 2018, 2019, 2020, 2021. So this year is calculation. Now the question, what was the depreciation charge on the motor vehicle for the year? And on this date, bought another motor vehicle B. Because the question is, the condition set, a full year depreciation is provided in the year of purchase. In the year of purchase means that they only refer to the year, not the month, not the date. So we just times 20%, which is the 2,000. So 2,000 plus 4,000, total should be 6,000. Okay, now let's move on. The following ledger appear in the book of trader. Okay, rate, balance brought down, bank. Okay, which statement is correct? Rate are accrued at both start and end. This is a start. This is the end. Okay. So the statement, this one is wrong because it's not both. Okay. This is a prepaid. This is accrued. Rate are accrued at the start of the year and prepaid. So this one is wrong side. This one should be prepaid. This one should be accrued. Okay. Rate are prepaid. This one is also both no. Okay. Only start is a prepaid, end is a accrued. So since ABC also wrong, so the last will be the correct one. So rate are prepaid at the start and end of the year is accrued. Okay, question 16. A bookkeeper make the following ledger entry. Account debited, bank, and debt recovered. Which transaction has been recorded? A credit customer pay his account by the due. No. This recover means that we written off in the past, now customers suddenly come and pay us. A late payment has been received for a debt not yet. That means this is wrong. It's already written off. A payment has been received for the debt that has been written off. This is called debt recovered. So the answer should be C. An irrecoverable debt has been written off. This is referred to the irrecoverable debt account. Okay, next move on, 17. Let me change smaller. Okay, The following account appear in the ledger of Delta Limited. Total trade receivable, balance breakdown, sales bank, and balance carried down. Provision for doubtful debt, balance breakdown, balance carried down, income statement. How have the total of trade receivable and the rate of the change of provision for doubtful debt changed by the end? So first of all, the total trade receivable beginning of the year 30,000, end of the year 22. That means this is a decrease. Okay, decrease, decrease. Next is that this amount is beginning of the year more than, so this one also decrease. Okay, now the question, be careful. This is the amount. Amount means dollar. Dollar is a decrease, but they're talking about the rate. How we calculate the rate? Pick this and this one. I calculate the rate 1200 divided by 30,000 times 100%. So let's see how is the rate first. 1,002 divide 30,000 times 100. So we get 4%. So this is a 4%. Okay, whereas this one is 1100 divide 2200 times 100%. So 110 divide 2200 times 100%. So this one is 5%. This is 4%, this is 5%. Actually, it's increase the rate. So the answer should be B. Okay, be careful with the word they use. This is talking about the rate. Okay, now let's move on. Question. Okay, next continue. On 31st December 2020, Helmut has the following liability: bank loan repayable, bank overdraft, and look at this date. This is less than a year. Okay, bank overdraft repayable on demand. This is a short term, also less than 1 year. Bank loan from finance, this one repayable. That means this is a long term, more than 1 year. Mortgage, this one also more than 1 year. So this one more than 1 year. So what was the total non-current liability? So only more than 1 year is considered as a non-current liability. So the answer should be B. Okay, now let's continue. 19. Vinita credit customer pay the amount owing in cash after deducting 2% discount for the prompt payment. How did this affect Vinita financial statement? Income statement. So here, credit customer pay amount owing in cash after deducting discount. So this one is a supplier or seller. So seller point of view, this discount is a discount allowed. So discount allowed is a expenses. So expenses increase. Okay, now statement of financial position. Customer pay, trade receivable will reduce. So the trade receivable is current asset decrease. So the answer should be A. Okay, Mohan and Deepa are in partnership. They provide the following information at the end of the financial year. Profit for the year, interest on capital, interest on drawing, salary. How much was available for the distribution to the partner? So profit minus plus. This is plus, this is minus, this is minus. That gets what is the net first. So 30,600 minus 2,005 plus 360 minus 4,000. So we get the net amount 24460. And they say that they provide the following. How much was available for the distribution to the partners? So this is the amount available for the distribution. So the answer should be B. Okay, next is question 21. Raj and Rohit are in a partnership sharing profit and loss in the ratio of 2 to 1. Raj is entitled to an annual salary of 3,000. The profit for the year ended 31st December was 14,100. So here, profit and losses. This one is 2, this one is 1. Raj is entitled salary, so Raj and Rohit. So this is 2 to 1. So annual salary, Raj is 3,000, the annual salary. The profit for the year ended was 14. So we have to take 14,100 minus 3,000 to find distributable profit. Share of the profit is 11100. So divide by 3. So divide by 3. So we get 3700. So now the question on 1st January, current account has a debit balance of 1,008. So let me open up the current account. Okay, this one is a Raj account, current account. Have a debit balance 1,008. And Raj get the salary. Salary is in here. Salary 3,000. And the share of the profit is 2 times this one. Okay, which is the share of the profit. Share of the profit is 7,400. Okay, this is a 7,400. Now, what was the credit balance on the Raj current account on 1st? So balance carried out is in here, because this side is 10,400. Take 10,400 minus 10,400 minus 1,008, which is the 8,600. So this one is the amount for the A. Okay, 21 is A. Next is, which item appear in the capital and reserve section of a statement financial position of a limited company? So capital and reserve. In the syllabus for IG, we only have 3 items. One is the ordinary share capital, general reserve, and retained earning. This one you will learn in your statement of change in equity. So this is the one. For debenture, all these debenture refer to the non-current liability. Okay, now let's move on. 23. The issued share capital of AN Limited consists of ordinary share. On 1st Jan, the retained earnings were 78,000. So here I open up the T account for retained earning. Balance brought down 78,000. For the year ended 31st, the company earns a profit of 65,000. So the profit will be 65,000. An ordinary dividend of 20,000 was paid during the year, and further dividend for the year of 15,000 was proposed. So ordinary dividend pay means dividend is in here, 20,000 paid, and further dividend, the keyword here was proposed. Proposed dividend don't put into here. Only pay dividend will be included into the retained earnings. So take note for it. We transfer to the general reserve. General reserve transfer 40,000. So what was the balance carried down in here? So take the credit 78,000 plus 65,000 minus debit side 60,000. So we left with 83,000. So this answer should be donkey. Okay, now let's move on. Question 24. Which group contain one item which may record in the both income statement of a trading business and income and expenditure of a club account? So which item that appear both? Bank charge happen, depreciation also happen, wages also happen for the both. Okay, here bank charge, not gross profit. Gross profit only trading business. Club is a service business, so this one is not. Deficit only club account, trading account no deficit. Treasurer expenses, this one normally refer to the club account only. So depreciation, treasurer, this one, so that means the answer should be A. Okay, 25. The following ledger account appear in the book of a club for the year ended. This is a bank, income statement, and so on. Okay, here, what is the statement is correct? Prepaid, this is not prepaid. This is the accrued. Subscription prepaid on. This one is a liability. Prepayment, 3,000. This one is correct. Prepaid, subscription prepaid is a liability. Okay, this is correct. Subscription received during the year ended amount to, so this is the amount received. The amount should be 29,000, which is the bank amount. Subscription relating to the year ended amounting to, this one, year related to the year. This is referred to the incomes and expenditure should be 24,000. So the answer should be boy. Okay, now let's continue. Okay, the following costs incurred by the clothing manufacturer: purchase the fabric, purchase the button, repair for the sewing machine, wages for the supervisor, wages for the sewing machinist. So sounds that all this one related to the clothing manufacturer. But what is the information saying that indirect cost? Which one is indirect cost? Repair, supervisor. So only 3 and 4. So 26 should be donkey. A manufacturer, question 27, a manufacturer calculate the cost of production for the year at 57,000. It was found that the lighting and heating 2,000 has been omitted from the financial statement. So this one, lighting and heating. Lighting and heating is allocated 70%. So this 70%, what was the correct cost of production? So this one 75% times 2,000. So we get 75% times 2,000, which is the 1,005. Okay, so this one is 1,005. Next is that the correct, this one, cost of production should add this amount. So plus, so should be 58,500. 5850 should be donkey 27. Okay, now let's continue. 28. Tariq provide the following. This is non-current. Okay. Tariq drawing for the year ended 31st Jan 2021 were 5,000. So here drawing profit. So this is the total asset. This is a liability. So we plus these two minus, plus these two minus. We find the capital. Opening capital and closing capital. This is 65,000. Okay. This one is 70 plus 25 plus 19. So this is a 114. So we open a simple T account for capital. Balance brought down is in here, this one. Balance carried out is in here, debit. Drawing is in the debit side, 5,000. They want to find the profit. So we take the debit minus credit. Okay. So here, profit, why there's the amount not there? Let me see. 6, am I calculate wrongly? Let me count one more time. 680 minus 1565. And then this one is 95 minus 19. Oh, this one is a wrong amount. Huh? This one should be 76,000. 76,000. So this amount should be 76 plus 5 minus 65. So the answer should be 16,000. So the profit should be 16,000. Okay, now let's continue. Okay, 29. Okay. No, does not keep the full set. So this is the information. What is a credit sale? So we open the trade receivable account. Decrease in trade receivable during the year. Decrease means that balance brought down is higher than the balance carried out. There is a decrease during the year. That means here is more than here, 2,000. Receipt from this one is a bank amount, 58,000. And then discount allowed is in here, 1,002. Sales return, 1,005. So basically this is information. Our credit sales must be in the debit side. So we take 58,000 plus 1,002 plus 1,005 minus 2,000. So we get 58700. So 58700 should be C. Okay, now let's continue. A trader provides the following: non-current asset, current liability, interest paid on the loan. Return on capital employed was, this formula is the profit before interest divided by the capital plus non-current liability. Okay, after that times 100%. So what is the information you have? Non-current, current, okay, interest paid. So these two plus minus, we get the capital. Okay, so our capital amount is 132 plus 28 minus 12, which is 148,000. So this is the amount that we get. Okay, now next is that, let's see, capital 148. And then after that, what was the profit for the year before the interest? Okay. This one is 12,000. It is 2,000 interest with profit. Where is the profit? Okay, we find the profit before interest times 100%. So to get this one equal to 12.5. So profit before interest should be 12.5 divided by 14800. So let me count 1, 2 point divide 100 times 148. So it's 18500. So 30 should be this one. This formula, profit before interest. This is the answer for it. Okay. They didn't give the non-current liability, so we don't have the information. We assume don't have. Okay. Now let's continue. Which change will cause the increase in the liquid acid test? So increase in the formula is the current asset minus inventory to current liability. Increase means this one had to increase. So inventory no effect, it has not increased the item. So this one, when decrease in the provision decrease, trade receivable increase. Provision increase, trade receivable decrease. So this increase can cause this one increase. The answer should be C. Okay, now let's continue. Ahina provide the following information. Year ended, this is the amount. Okay, what was the rate of return for the turnover inventory? So here, okay, this is a 2020. So the formula for it is the cost of sales over average inventory. So our cost of sales is this one, 12000, divide opening inventory is 4,000 plus 8,000 divided by 2. So 12,000, 120,000 cost of sales divided by 6,000. Okay, then we get 120 divided by 6. We get 20 times. So the answer should be B. Okay, now let's continue. Which action improve the gross profit margin? Gross margin is that revenue minus cost of sales over the revenue times the 100%. So expenses, nothing to do. Increase selling price, it will improve it. So this one, yes. Expenses, nothing to do. Reduce, it will reduce the revenue. So the answer should be B. Amara depreciate her non-current asset by same rate using the same method every year. Same method means that consistency. Okay. Same method, same rate, consistency. Which group of accounting principles is she applied? In the depreciation topic, there are 3 concepts that we are always using. One is the prudence, and then matching, and consistency. So these 3 concepts, where is it appear in the C here. So prudence is talking about not to overstate the profit and the asset. Matching concept, match the expenses incurred, match to the revenue earned. So the depreciation charge will match to the asset used for the same period. Prudence is when we charge depreciation, asset will be reduced, profit will not be overstated. Consistency is talking about the same method. So the answer is C. Last question. Kamika financial statement did not comply with the accounting principle of the money measurement. What has Kamika done? Not apply the accounting principle for the money measurement. Money measurement talking about we only record based on the value that we have. Included a value for the skill. This is the not complying. Forgot to include prepaid. This is a matching concept. Under the matching concept, against record her drawing in the wages. This is under business entity. Okay, value of inventory above original cost. This is under the prudence. Okay, okay, or this one is again prudence, also can be the historical cost. Okay, we should record under historical cost. So this answer should be A. So that's all for the paper 1 that I'm sharing with you. Okay. Okay, so that